Gold is dropping fast today, and the $4,040 and $4,000 defense levels are under attack right now.
This video is for informational purposes only and does not constitute financial advice. Always do your own research.
This is Coin Picker, fully, where global markets meet clear, powerful insights. Welcome back, everyone. You're watching Coin Picker, String, your daily source for gold, markets, and breaking financial news. Gold opens the session under pressure after failing to clear the 4,100 zone. Sellers push the price back toward the 4,040 and 4,000 support cluster. Investor sentiment shifted after hawkish Federal Reserve minutes hit the market. The document cast doubt on a December rate cut, fueling a stronger US dollar. Then came the delayed non-farm payrolls report and it surprised the market. The US economy added 119,000 jobs, beating the 50,000 estimate. But unemployment unexpectedly rose to 4.4%, confusing sentiment. This mix pushed gold lower as traders scaled back hopes of a December rate cut. The CME FedWatch tool now shows only a 39% chance of a cut. As the dollar strengthened, gold retreated 3 days in a row, retesting 4,025. Despite the pullback, buyers continue defending the psychological 4,000 handle. Upcoming US PMI and Michigan consumer sentiment data may decide gold's next direction. Meanwhile, central banks continue their steady gold purchasing campaign. China added over 1.2 tons in September and kept buying into October. Global accumulation supports long-term gold stability despite short-term volatility. These macro shifts set the stage for the critical technical levels ahead. Now let's break down the technical structure shaping gold's defensive zone. Zooming into the 4-hour chart, gold's structure tightens right above the key 4,025 level. This rising trend line from late October still holds, acting as the first line of support. Below that, the 78.6 Fibonacci retracement sits at 3,997. These two levels, 4,025 and 3,997, form gold's defensive shield. Momentum indicators conform the pressure, with MACD now deep below zero. This signals weakening bullish momentum, even though sellers aren't fully in control yet. RSI sits around 43, clearly below the neutral 50 midpoint. This reflects bearish pressure, though not an extreme oversold condition yet. Immediate resistance stands at 4,119, the November 2nd high. If gold reclaims that level, the next barriers appear at 4,125 and 4,210. Support remains firm at 4,025 and 3,997, unless a broad sell-off hits. Should that break, sellers may reopen the deeper targets at 3,970 and 3,930. For now, the structure suggests consolidation before a directional breakout later in the session. Traders will be watching whether gold respects the current trend line or finally gives way. A bounce here could drive a short-term recovery toward resistance again. But a breakdown risks unlocking a stronger bearish wave on the 4-hour structure. With momentum fading and support tightening, the next moves will be decisive. Let's map out the 3 key scenarios that could define gold's next major move. Scenario 1. A bearish breakdown if gold loses the 4,025 and 3,997 shield. If that happens, sellers could target the November lows at 3970 and 3930. This would mark a deeper correction, not a complete trend reversal, unless macro shock hits.
Scenario 2. A neutral range forms if gold holds above 3997 but fails to clear 4119.
This scenario reflects indecision, often seen before big data releases like PMI and sentiment. Scenario 3. A bullish recovery if buyers reclaim 4119 with strong conviction. Such a breakout reopens the path to 4125 and the major wall near 4210. Above those levels, gold could attempt a short-term rally back toward the mid-4100s. Momentum will depend heavily on macro signals, especially any weakening in the US dollar.
Any drop in the dollar or treasury yields could amplify bullish pressure on gold.
Safe haven demand adds another tailwind, especially if PMI data disappoints. Central bank purchases continue to offer long-term support that cannot be ignored. The People's Bank of China has been buying for 12 straight months, a major stabilizing force. Together, these scenarios build a clear roadmap for traders navigating the week ahead. But to refine them further, we need to examine gold's psychological zones next.
These zones explain how traders behave during stress, revealing the next probable moves.
Let's zoom out and examine how the weekly structure influences gold's current defensive zone.
Notice how price consistently reacts when sentiment shifts. Crowd psychology drives every wave. Buyers tend to step in near key supports, while hesitation appears sharply at resistance.
This dynamic creates psychological layers that guide gold's movement during uncertainty.
The fear zone begins beneath 4025, where volatility tends to spike.
Below that, the psychological wall at 4,000 determines whether buyers stay confident. If momentum holds above these zones, optimism tends to return quickly among traders.
But discipline remains crucial. Even strong setups require smart risk control. Emotions often take over in volatile cycles, leading to premature entries or exits. A more objective approach helps navigate uncertainty with far more clarity. Let's recap the key levels defining gold's outlook in this session.
4025 serves as the first defense, 4,000 as the psychological anchor, and 3997 as the final shield. If these hold, gold could reattempt the upside toward 4119 and beyond. But any break below support risks unlocking a deeper bearish phase toward the mid-3000s.
Traders must stay flexible and adjust bias as new data hits the market.
Use these levels as references, not predictions. The market always reacts to real-time conditions.
This analysis is for informational purposes only and does not constitute financial advice. Always manage your risk responsibly. Stay ahead of the market. Subscribe now and follow CoinPicker for the latest insights.